Can you believe it? Once again, it's talking technical, and if you must tell me that we are in March, I will not believe you because it looks like I missed a month. But what we're seeing is we're seeing some of the strongest markets in history right across the world. I mean, it's a liquidity-driven market. Everybody just rush into the market. Everybody just loves the market. And we always guide the sentiment of readers and investors and some of our clients by the questions they ask. And you can see it's a clear picture nowadays that everybody is just believing that the market can just go up and that we're not going to see corrections. And it's interesting how people are thinking about the market. And as I warned some of my clients saying, listen, the market had a beautiful rally. I think it's the strongest rally in history in 1 year from, let's say, from a low to a high. And people just don't believe it anymore. They just believe that markets can just go higher. So let's kick off with Billiton. And I've got the chart up here, and Sipho asked about Billiton, and he said, listen, Frans, I think that Billiton can still run a lot. I cannot even see that the stock will ever come back. I must just buy it because inflation is on with us and interest will be kept low, and the oil price is going up and the coal price is going up. And what do we see here? I mean, you're quite right, Sipho. This share is just running. And if I look at this chart, and it's almost a common, you can almost say, story on all the charts, is that they're running, making new highs, and they break off some strong resistance lines or wedges. They're just ignoring everything. It's almost like you feel like that the technicals do not work anymore because the stocks just power ahead. This is the case of Billiton as well. Just look at this stock here. It started, the rally actually started last year, you know, when the COVID was bad. I think the markets will say in maybe a year or two, what was COVID? I mean, COVID was just a blip in a big wrong rally but I mean, if you look at the chart here, there was a resistance at 477.61, and it just powered ahead. So I will say, if you want to get nervous, I will not buy the stock now because the stock had such a beautiful rally. I mean, in a weekly, this is a weekly chart. Just from the first week of February, it almost add up 80 Rand on the share price. That's about a 15-20% go just in a month. And if you think about it, in November, early November last year, from 309 to 493, that's almost a 30% rally in a case of 3 months. So I will be nervous only when it breaks there. This falling wedge can come into play, rising wedge can come into play if the stock drops below 447.25, and it can take the company down to 387.47, the share price. Well, let's have a look at the overall index, because that is one of the big drivers. Everybody just love this overall index. And if you look at this chart here, and I actually want to show you the 40-week moving average here. This is the weekly chart of the overall index. Now you can just see here, it's almost in a rising, you can say, channel or ascending channel. And look what happens. It goes up, it bounces against the top or the resistance, it comes back and it finds support, and then it just rallies and powers ahead. Now, if you look at this chart here, we're right at the top end of this resistance line again. The momentum is clearly up. And Kobus asked about it. Kobus, while we're above the 40-week moving average, we solidly, you can almost say, in a super bull market. And there was the previous high. We're on a brand new high. The previous high was at 676.47, so 67,000. And we're at 68,500, and it looks like we're heading to 70,000. And there's just nothing wrong with this chart. I will only get nervous when we go below this line. And that is the low of a few weeks back. The best was the other day I read when the market pulled back for a few days. The guy said, wow, that 3-day bear market was brutal. So everything is just going like a Boeing. Nothing can go wrong with this market. But Kobus, I'll be nervous when the overall index gets below 65,986. But I also want to show you guys something. I've seen it over the many years that I'm involved with the markets. I'm zooming it out a little bit. Look what we see here. It's the 40-week moving average. Every time that the overall index just rallies a little bit too far ahead away from this index of this 40-week moving average, it always pulls back to, let's say, the mean. Even here, when it fell far to the bottom, it also picked up. Look at what happened last year with the COVID. It fell way below that 40-week moving. It worked all the way up. And what happens now? I think we're also here at the point now where it almost rallied way to the extreme, and it will sometime come back. What we're seeing here is every second or third day, the world's got a new plan to combat any problem. So the big thing nowadays, if there's inflation or fear of inflation, they just print more money. If there's a fear of interest rates that can go up, they just print more money. If there's any country that struggles with COVID and there's a little bit of a regulation, they just print more money. So the big thing here is this is not a value-driven market. This is a liquidity-driven market. So just be careful to say that this market can just go up and nothing can go wrong. And in actual fact, I said to a friend of mine the other day, when we've got a liquidity market like this, we must almost ask people that develop ETFs, that they must just develop an ETF to track the printing of money of the big banks like Federal Reserve, and then we can just buy that ETF and just sit on the market and make a profit, because you don't need a risk profile. You don't need to do any fundamental or technical analysis. The only thing you need to do is you wait for the money to be printed, and because the money is printed, you'll make money. So we're on a new high here. Let's see how high we can go. Well, let's have a look at Resilient. Resilient is one of those companies. It's a property company, and I just want to get it quickly here. Resilient. There you are. And Johnny asked about Resilient. Johnny, if I look at the chart, I actually like the chart. Remember, this was one of the companies that also fell off a cliff last year. This is also a weekly chart. And if I look at the chart, and this is the big thing for me here. If I look at that, there you are. There was the low last year around, let's call it middle March. It went up, it came back, and it rallied up, and now we see a low, a higher low, a higher low, and we broke above that. What I like about this, there's a low, there's another low, that's a double bottom, and we're starting to work up to this point where this double bottom will kick in. Now, where's that place? And that place sits at, I just want to click in there, you are. This double bottom will come into play when the share goes above 47 Rand and 30 cents. Above 47.30, this double bottom can come into play, and it can take the share way all the way back to that resistance line there, and that is waiting at 59.76. Well, some of these property companies, they've got big plans to restructure. Some of them's got rights issues. Some of them's got some, you can almost say, problems with tenants that cannot pay their rent, that lost a lot of business. But everybody's happy. The market's got you can almost say a view of a 3-4 years that everything is fine, and that everything will come back to normal. So I like this chart of Resilient. Johnny, if it can break above, well, if it can remain above this 43 Rand level, and if it can break above this resistance line, we can see a nice move further to the upside. Inti asked about PPC. Now, PPC, we called on the program many, you can almost say months ago, and we liked the chart, and the simple reason we liked the chart was because it was just coming out of the dips, and there was a nice saucer pattern here. And what we see now with the chart is there's a low, higher low, and the first time now we see a little bit of a blip. Now, Enti, the big thing with a chart like this is always remember, when it comes from a level of about 45 cents and it's 1 Rand 71 in a matter of a few weeks, then you must remember that it can maybe give you a little bit of a pullback. It cannot just rally in one way to the upside. Where's the crucial point here? The crucial point here is while it is above this little line there, I just want to draw it in there. There you are. Here's the level. While it is above 153, in actual fact on the daily chart it shows you 151. 153, you can maybe go back all the way to 133, because what do I see here? Well, the guys that watch the program regularly will immediately see what I see, and they will say, yes, Frans, we see a possible head and shoulder formation. There's the left shoulder, there's the head, we may be working on the right shoulder. Neckline sits at 157 and target about 132 if it plays out to the full. Interesting thing about the markets nowadays, when you pick a share, and we do it a lot, we analyze shares for clients. So when we say sometimes that the share can maybe go to that resistance, 115, we see that the market has got the tendency now to overshoot. It either goes way above 115 and it stops at 160. And if it drops, you say maybe it will drop to 80 and then it goes to 70 cents. So we've got a market where there's a lot of nervous around and people buy with a vengeance, and if they sell out of fear. And that makes me a little bit nervous. But PPC, I'll be positive about it again, above 193. I think then we can see some new highs here. But below 157, I'll be nervous because the market can maybe just surprise us and some profit takers come in and take PPC a little bit lower. For the long-term chart, it still looks okay. I will only get nervous below 137. Well, visit our website, www.fransklerk for our services, and we'll chat again.